Hello everyone, welcome back to our weekly market analysis video with me, Frankie, your market analyst at Markets4U. In today's video, we'll be looking at the key economic events and data releases from November 10th to November 14th, 2025. I've already set up my screen to display the economic calendar from the traders room at Markets4U. I've set the dates from November 10th to November 14th, covering this week's important events in GMT. Please remember to adjust to your respective time zones. Please take note that US government data may be impacted by the shutdown. Tentative events are subject to delay, revision, or cancellation, so please monitor the calendar closely for any updates. Let's dive into this week's events. Monday starts with Australian Westpac consumer confidence data. Tuesday brings Australian NAB business confidence, UK employment figures including employment change and unemployment rate, and German ZEW economic sentiment index. Wednesday features Canadian building permits data and Japanese PPI figures. Thursday includes UK RICS house price balance, Australian employment data with employment change and unemployment rate, UK GDP figures including quarterly and monthly readings along with industrial production, Eurozone industrial production, and the crucial US inflation data including both headline and core inflation rates. This week's key market-moving event will be the US inflation data on Thursday. Additionally, UK employment figures on Tuesday, Australian employment data on Thursday, and UK GDP figures on Thursday will also create significant opportunities across major pairs. Now, let's go to the technical analysis. This week, we'll focus on the Australian dollar against the US dollar and the British pound against the US dollar, as both instruments face important employment data releases. Let's start with the Australian dollar against the US dollar. Looking at the daily chart, the Australian dollar is currently trading around 0.6495, showing bearish pressure in recent sessions. The price is moving below the 20-day moving average, confirming the downward trend. The stochastic oscillator is moving around the oversold area, suggesting potential for a bounce, but the overall momentum remains bearish. Looking at important levels, the Australian dollar against the US dollar has support at 0.6448 and 0.6392, while resistance can be found at 0.6539 and 0.6593. With Australian employment data ahead on Thursday, this will be an important event for this pair. The employment figures are expected to show 20,000 jobs added with the unemployment rate potentially holding at 4.4%. The 0.6448 support level will be crucial to watch. If this level breaks, it could accelerate the downside movement towards 0.6392. However, with the stochastic in the oversold area, traders should be prepared for potential short-term bounces. Now, let's turn to the British pound against the US dollar. On the daily chart, the pound-dollar pair is currently trading around 1.3064, showing signs of a potential recovery. The price is moving higher toward the 20-day moving average from below, attempting to reclaim this key technical level. The stochastic oscillator is moving higher from the oversold area, supporting the potential for continued upward movement. Looking at key levels, the British pound against the US dollar has support at 1.3002 and 1.2835, while resistance stands at 1.3275 and 1.3432. Tuesday's UK employment figures and Thursday's GDP data will be crucial for this pair. The employment data is expected to show 50,000 jobs added, while GDP is forecast to grow by 0.3% quarter-over-quarter. The 20-day moving average will be the key level to watch in the coming sessions. A successful break and close above this level could confirm a bullish reversal and open the path toward the 1.3275 resistance. However, failure to break above could see the pair test the 1.3002 support level again. Both instruments could see considerable volatility this week. Traders should be particularly cautious during Thursday's US inflation data release, as this event can cause sudden spikes in volatility and potential gap risks across all dollar pairs. Remember, always manage your risk carefully and never invest more than you can afford to lose. That's it for this week's analysis. See you in the next video.